Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. President Trump is threatening to impose 50% tariffs on goods from Brazil, and he cited Brazil's insidious attacks on free elections. Earlier in the day, Trump unveiled a new round of tariff demand letters sent to 7 U.S. trading partners, and we'll take a look at the tariff story momentarily with Deborah Elms. She is head of trade policy at the Heinrich Foundation. First, a look at cryptocurrencies, because today, Bitcoin broke above 112,000 for the first time. For a closer look, I'm joined by Matthew Tuttle. He is the CEO, also the CIO at Tuttle Capital Management. Matthew, thank you so much for making time to chat with me. A lot of dynamics, obviously, playing out today. We can talk about the tariffs. We can talk about the Fed minutes and increased risk appetite, reflected not just in this new record high for the NASDAQ composite, but obviously in the rally in Bitcoin today. Is the mood in markets, do you believe, overly optimistic?
So I don't. And, I'm paying a ton of attention to what Trump tweets, not about tariffs, but what he tweets about markets. He warned everybody before Liberation Day, market sold off. He told you to get in at the bottom, told you to get in again. And the other day he tweeted, markets at all-time highs, we're going to keep them there. Certainly we're extended. And, in the short term, we're due for some sort of profit taking. But, until Trump says otherwise, we're going to be optimistic here.
The other thing the president has indicated very clearly is his desire for a much more dovish Fed chairman. That outcome seems certain when Fed Chair Jay Powell's term expires. So the question is whether or not it's too much to say that the next Fed chair is going to deliver on lower rates immediately, or do you think that's a bridge too far?
I don't. I think that is a prerequisite. I think that's part of the split you're seeing in the Fed, people jockeying for that position. I think whoever he brings in will lower interest rates immediately, barring, something obviously out of left field, or else they will get the same storm that Powell is getting. What we don't know yet is how the bond vigilantes will look at things. So, the Fed controls the short-term rates. Fed doesn't control the long-term rates. We had 5 days in a row of the 10-year ticking up until today. So, that's a wild card, but I would certainly expect whoever the next Fed chairman is to be lowering rates right away.
So I'm going to push back a bit here, ever so slightly. Yes, the Fed does control the policy rate, the Fed funds rate. It also has the ability to expand the balance sheet, perhaps in a way of controlling the yield curve. So do you think that there is a bit of a risk here under a new Fed chairman, a dovish Fed chairman, that we could see a little more quantitative easing if yields don't cooperate in the way in which the administration would like?
I certainly think that's what you're going to see if that happens. If the bond vigilantes revolt, say, hey, look at the debt. If foreigners aren't buying our debt, then yeah, I think there will be a lot of pressure on the Fed from the president to, maneuver things around a little bit so that he gets the interest rate regime he's looking for.
One of the other things that was very interesting today is the rally that we had in cryptocurrencies, and we intraday had Bitcoin breaking above $112,000 for the very first time. A lot's going on here. The combination of geopolitical uncertainty, maybe a little bit more institutional interest. But I think the outlook for regulatory clarity may be changing a bit. I mean, next Wednesday, we have a House Oversight Subcommittee hearing on making America the crypto capital of the world. How do you feel about crypto, broadly speaking?
I think at this point, crypto is a must-own in investor portfolios. I think we're entering a golden age of crypto. We've never before had an administration that's rabidly pro-crypto. And some of that obviously is their own self-interest. We've never had a crypto czar, and we have an SEC that is entirely different than we've ever seen before in crypto. And, this is coming from a guy who, we've got a bunch of crypto ETFs. We filed for a bunch more. We're dealing with an entirely different SEC than we've ever dealt with. You're seeing crypto treasury companies come out now with mixed results. But, I think that, I'm not surprised we hit new highs on Bitcoin today. I would expect it to continue to rise. And, and I would also expect the same for a lot of the other real cryptocurrencies.
It seemed to move in lockstep with this rally that we had in big cap tech today. So if you had to come up with a strategy on how to use a crypto ETF in a portfolio, would it be as kind of a growth component? Are you looking to hedge volatility with crypto? What's the use case here in terms of a crypto ETF as a part of a portfolio?
Yeah, not really a hedge. I mean, a lot of times crypto enthusiasts will say, oh, crypto's a hedge, and then the market will sell off 3% and Bitcoin will sell off 5%. Our definition of a hedge is something that works every single time. Crypto will work some of the time. It won't work all the time. I think it's exposure to a diversified asset class. And, obviously today, not a diversified asset class, but there are times when it is. And I think it's also even more exposure to a theme that I think is a dominant theme today and is likely to be a dominant theme for quite some time. And so that's why I think it really should be in your portfolio.
So let me understand how the market is functioning right now. Is it primarily being driven still by the retail crowd, or are institutional players having greater influence these days?
So, the retail crowd has been right on this from the very beginning, buying the dip. The institutions are being dragged in. They've got no choice. They can't watch this market rally like this without them being involved. So the higher we go, the more they're going to need to get involved. So it's really at this point, I mean, when you see a move like we saw today, and, and I haven't seen the breadth numbers or anything like that, but, we were extended. The market kind of took a breather for 2 days in a row. And then you had a nice big up move. They tried to sell it off midday and they couldn't. I got to figure that's all hands on deck at this point.
So what have you observed in the relationship between, let's use Bitcoin as an example of a major cryptocurrency, and the US dollar? What has that correlation been like? And talk to me a little bit about how you understand it and what it's telling you.
Yeah, I mean, what it's telling me is that Bitcoin is uncorrelated with the US dollar. So, it also gives you, as an investor, some protection from a falling dollar. And because we've had a falling dollar, that's a lot of, the interest. I mean, certainly not all. I mean, a lot of the things we talked about are maybe more important, but it's a lot of the interest you've had in money moving into crypto, but also money moving into gold. Gold is another one. Gold recovered a little bit today. It had a bad couple of days, but gold has been on a rampage as well. And I think in a lot of ways, the gold trade and the crypto trade have been the same.
So is there an inverse correlation between, let's say, Bitcoin and the dollar that, in your view, has shown consistency for a while?
Some consistency. More consistency there with gold, some consistency with Bitcoin. The problem with Bitcoin is there are so many other factors, and that comes into gold to an extent, but there's so many different factors. I wouldn't look at it as, hey, every time the dollar goes down, Bitcoin is going to go up. But there is a strong inverse correlation there. And it makes sense. People are looking for alternative currencies to store their money. And, and they have not been really interested in going into intermediate term or longer term treasuries. They've been putting money in Bitcoin. They've been putting money in gold.
Matthew, we'll leave it there. Thank you so very much. Matthew Tuttle there. He is the CEO, also the CIO at Tuttle Capital Management, on the line from Greenwich, Connecticut, here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. President Trump unveiled a new round of tariff demand letters today sent to 7 U.S. trading partners. And of those 7, only one, the Philippines, ranks among America's top 50 trading partners, a rate there of 20% set for goods from the Philippines. And then later in the day, Trump threatened to impose 50% tariffs on goods from Brazil. He cited the treatment of former Brazilian President Jair Bolsonaro, and Trump called on Brazilian authorities to drop charges against Bolsonaro over an alleged coup attempt. Well, then we heard from Brazil's current president, Luiz Inácio Lula da Silva. He said any measure to raise tariffs unilaterally will be answered in light of the Brazilian law of economic reciprocity. So, for a closer look at the tariff story, we caught up with Deborah Elms. She is head of trade policy at the Heinrich Foundation. She spoke with Bloomberg TV host Heidi Stroud-Watson-Cherry on. Now, Heidi asked the first question about U.S. tariff policy broadly and for Brazil in particular, since Brazil runs a trade deficit with the U.S.
Yeah, I mean, I think that the big answer at the moment is that while the April 2nd tariffs were problematic because they used a really misguided formula, at least there was a formula. This latest batch of letters that Trump is sending out really make no sense at all. Some countries have gone down, some countries have gone up. There's absolutely no justification for either up or down, or even, frankly, staying the same. And so the result of that is complete confusion over what are U.S. goals and what are U.S. objectives. With the exception of the Brazil letter, every other letter has been identical. And so, again, for trade partners, what are you supposed to do with that? You've suddenly been given a new number, and it's not based on anything you either have or haven't done. It's not whether you've been there, you haven't been there, you tried hard, you didn't. It's completely random at this point.
And maybe it is the strategy of throwing everything at the wall and seeing what sticks, right? Everything's on the table under this new approach. But I do wonder, does that mean if you're a trading partner, you might also be thinking, well, what's the point of negotiating? Because he says one thing, he might mean another. Something could change in the next hour or day or weeks anyway.
Yeah, I think that's been the question from the beginning with this second version of the Trump administration. What is it that they're looking for? And even if you gave that to Trump, would he be satisfied with that? And would he be satisfied with whatever you gave him for more than 5 minutes? And I think the longer this goes on, the more likely it is that trade partners will say, well, we tried. We did take this seriously. We spent a huge amount of time, effort, money, resources, and we ended up with almost exactly what we got at the outset. And so we are going to dial back our participation in these discussions, and we'll just sort of see what happens. But I think it is problematic because these numbers that the Trump administration is throwing out are huge. I mean, we would have said at the beginning of this that 10% was outrageous. Remember that U.S. tariffs in December were just over 2%. So 10% would have been a massive increase in tariffs. And now we're looking at numbers easily between 20 and 40, and Brazil just got handed 50. So these are numbers that in any other world we would be completely flabbergasted to be discussing at all. And now we seem to be sort of discounting them as just the price of doing business.
So let's talk a little bit about Brazil, because as Heidi mentioned, this is a country that runs a trade deficit with the United States. They've had a traditionally very strong partnership with the United States. And at the same time now, President Trump singling out Brazil for 50% tariffs could almost look politically motivated, given that he's also talking about former President Jair Bolsonaro. I mean, isn't this interference, using economic tools to politically interfere in other countries' domestic politics, and doing it so overtly? What's the message that it sends to other countries?
Well, I think it's deeply problematic. Remember that the official justification for these tariffs is an Emergency Economic Powers Act, which says that there is an economic emergency that needs to be resolved, and Trump is arguing that tariffs are the solution to this to this set of economic emergencies. And it is hard to figure out what kind of economic emergency is plaguing the U.S.-Brazil relationship such that you need a 50% tariff. I think we already have this particular justification under dispute in the court system in the U.S. 2 courts have found against it. It's now in an appeals process. We'll see what happens. But I think most alarmingly, if I was Brazil, the letter also indicated that they are going to start a different kind of trade process with Brazil called a Section 301 of unfair trade practices. And if that happens and goes forward, then no matter what takes place in these court cases under IEEPA, there is still justification for treating Brazilian trade very differently in the future. And that can be extraordinarily long-lasting and damaging.
And then, as a country leader that's negotiating with the United States, do you see this as a 4-year blip? Can you just get over it, weather through the crises right now, and try to get to the other side? Or is this going to be a more long-term issue if President Trump is representative of what the Republican Party has now become?
I think that is, of course, a giant question that every leader is asking themselves. How long is this going to be? And clearly, a lot of the commentary is suggesting that the goal is to just play for time, to do whatever it takes, play for time, you know, a week's extension, a month's extension, 6 weeks extension. As long as you keep kicking this can down the road, it'll be fine. But I think that's also problematic because, remember, these tariffs are enormous. 20 to 40% across the board for many trade partners is really extremely problematic. And so you can say we're just going to pretend, or we're going to play, or we're going to extend. But if that doesn't happen, then all of a sudden you're facing very high tariffs that have real economic consequences for your domestic economy. Those are people's jobs. Those are livelihoods. That's businesses that may have to close as a result of these incredibly high tariffs implemented extraordinarily quickly. And so I think that the challenge, as always, for leaders is, well, what, if anything, could I do? And if I could do that, would I do so? And if I did it and I got an agreement, how long would it last? And so I think these are all questions that are still in the minds of every trade partner and will be for some time to come.
Especially perhaps India, could they be next in the firing line? We thought that India was safe, that then the agreement would come after the UK, Vietnam, and the Geneva framework with China. But now if you lump India together with the rest of BRICS and then you threaten an additional 10%, anything that has been negotiated until now, does it even make sense? What's the point?
Well, I think it's a great question. And if you want a poster child for this, I would say look at South Korea, which has a free trade agreement with the United States that was painfully renegotiated under Trump's first administration. And in spite of that, and in spite of a lot of effort on the part of their government since April 2nd, they actually got hit again with a 25% tariff yesterday in one of these letters. So I think it does make you question the value of any agreement or commitment. However, the alternative is, well, what if we actually succeed? What if we get the outcome we're looking for and we're then somehow safe for at least a longer period of time and maybe for the duration of Trump's term? That's a gamble that every government has to decide whether they're prepared to accept or not.
Deborah Elms, always good to have you with us, head of trade policy at the Heinrich Foundation, of course, talking about all of these tariff implications with the threats coming from President Trump.
Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.